Hello and very good morning, good evening, good afternoon, everyone, wherever you are, at whatever time place you are. So today I'm going to start with something which is known as technical analysis. And when you look into technical analysis, there's going to be a from scratch teachings that's available on various networks, and I would appreciate that while you are taking undergoing my teachings, you just follow a few rules that whatever you have learned so far, you just keep it in your pocket and learn what I have to say. I've been into this crypto market since a very long time, and I've been basically giving you all my insights about the crypto market, how we trade the crypto market, and how do we make profits out of the crypto market. There are people who have invested a lot of money but have made nothing because they don't understand what a trend is. So, to explain you something very nicely and very briefly, what we have been taught is a market rises, okay, and then it falls, and then again it rises, and then it falls, and then again it rises, then it goes down, and then again it moves like this, making a lower high and low low. But do you really think that this is how a market works? I don't think so. Let's look at it. So this is an XRP USDT chart, and I have a few drawings out here. Please ignore the drawings. So if you look, it doesn't looks that way. It actually doesn't looks that way. Market is not going the way we've been shown that a low is created or a high is created, and then again the market makes another lower low or a lower high, and then a higher high is printed. No, that's not how the market works. How does the market works? And definitely doesn't works on something that you've been given or you've been initiated, known as these lines, which are called as let me just give it a name that you already know. It's called resistance, and the bottom line is called as support. But do you really think that the market runs in this manner? I don't think so. Why do I don't think so? Okay, let's take one of the charts and let's go on the line chart to get things pretty clear. So if someone is saying that this is a resistance area, and let's say that this is a support area, do you really think that prices don't move below them? Let me just make a line on that. Let's say that this is the area for your support, this is the area for your resistance, and this is the area for your support. Do you really think that the prices don't go beneath it? Oh, definitely you're wrong, because the prices are bouncing below it. Now, why is it so that the prices are going below it? To understand this, you need to understand that we have been taught in our traditional books that market moves from a low point to a higher point of resistance, creates a support, then it moves higher, then again it creates a support, then it moves higher, then let's hold our internal range as well so that people are not deceived, and then again it moves higher and creates something like this. But my friend, the market don't move like this. If you need to understand the basics of market, the market moves in a very specific manner. It creates a low, it creates a high. Then it creates, or it tends to create, a range, which is known as the internal range, or it's also called as noise. After this noise, it tends to move back again and creates a higher high. If this is a higher high, which one of them is my higher low? Let me just print it out here. If this area is indicated as a low, well, then let me just copy and paste it. This is an area of high for me. Okay, this is an area of high. Now, which is a lower high for me, or a higher low for me? Sorry, higher low. Will you call this as a higher low? Will you call this as a higher low? Will you call this as a higher low? Which one is a higher low? Until unless this range is broken, you cannot predict which one is a higher low. Generally, the lowest line that's been formed is considered as a higher low, and it's only formed when this resistance line or the previous high is broken. That's how a market works. Moving ahead, so we have understood something Sorry, you might be hearing barking of dogs because I'm somewhere in the mountains and it's really difficult for me to, ask the dogs not to bark. They might be seeing some leopards or they might be seeing some tigers out here in the woods. So you may also hear stripping of crickets, sounds of crickets, in fact. So when we have understood that a low is created, a high is created, and then there's an internal range, and then market again goes and forms a higher high. Now, what is the range for the market that's going to come down? It's going to come, it can come anywhere near to this point. It can come anywhere near to the higher low that it has formed. So again, it creates a noise and then it forms a higher high. Then the market tends to come down and it breaks this lower or higher low and it creates a lower low. Okay, once this is created, this entire pattern out here is called change of market structure. If we were in a bullish trend from this area, this particular breakdown has changed the pattern. Now, in this very case, which one would be considered as your lower high and a lower low? Oh my God, this is pretty interesting. Definitely, there is nothing like, okay, this has been formed, so there has to be some type of difference it creates. Some people may say that, okay, this entire range can come down. I would completely agree with you. I'm not going to say no, that doesn't form, because in this market, you never know where the prices are going to go until unless you're very, very, very good at it. So this was a change of market structure because this low was taken, and this is how the market tends to work. So whatever we have learned in this video, first things, that the resistance and the support points, they don't work. The traditional market, it doesn't works. The second thing, why is it so that when we get something, did I just move those drawings, I guess? Was it still there? Okay. Why is it so that we have wicks above these areas? We do have wicks above these areas because right above the resistance, people who are basically putting their shorts or opening their shorts from these levels. They tend to put their stop loss at these very areas, and that's the reason you're gonna find whenever you see a wick going up, it's not supply or demand zone. It's basically grab of liquidity. Game of liquidity is something that I'm going to teach in the very next chapter, in the very next video. Till then, what I've taught, to like it, to subscribe it. I'm going to keep things very short. It's going to be a 5 to 10 minute video, no more than that, because you tend to get bored. Just looking at the crypto market very quickly. I'm not going to waste a lot of time of yours. It's at 3.83. Yeah, and the markets are coming down. We are seeing Bitcoin lashing down some $1,000. It was at approximately 119 today in the morning or somewhere around 118 something. Nevertheless, we are at 117, 135. Ethereum has 3,753, and XRP is doing good because I placed some shorts. I've taken out some profits from my 2.72 area, and yes, I have opened up a hedge range as well, where I have placed a short, and it's a recent short at 3.052 area. So I'm going to hold this position. I'm going to see what happens. But if you are a new trader, I wouldn't request you to go on futures. The fear and greed index is close to 62. It's not all season. Money is pushing from all the altcoins into the Bitcoin right now. Things will eventually change in the very next week. We are expecting the prices of gold, silver, Bitcoin, and other virtual currencies to boom. Oh, yes, it is not all season as of now. We haven't seen that old movement as of now, but very soon we're going to see that. But that's it. Thank you, everyone. Thanks for joining. I'll see you in the very next video very soon.